Yeah, guys, thanks. I just wanted to come back because obviously we did share with our viewers the headlines that we had in terms of the potential for the company selling itself or trying to. But as we pointed out at the time, these things can move so quickly. And I just wanted to share that what I'm hearing is that, in fact, they are moving very quickly in terms of deposits moving out, making it very or more difficult for any buyers to really assess and consider a purchase of the bank. Perhaps a bit too early to say, but nonetheless, it would already appear that those attempts to potentially sell this company, and again, there were a lot of interested buyers based on the franchise, but the attempts to potentially sell it certainly seem to be running into the reality of the moment, which is it's hard to buy something when all the deposits are fleeing. And so, we have to, I think the market has to prepare for the possibility that there will not be a sale, and then you can leave it to your own imagination as to what that means. We have to assume the government regulators are already in there as well. So it continues to develop, but we certainly share the news as we get it, and There's no doubt that it's factual that there are buyers that were looking and being talked to, but nonetheless, Jim, as you well know, these situations move perhaps too quickly for any buyer to really be able to get something done in the time you need to.
Right. I mean, you look at, let's say J.P. Morgan. They could buy anybody. That's how strong their balance sheet is. They don't like this kind of lending. They don't like to lend against stuff that may be chimerical. They're too good. They've got a great investment management. They would never do it. Goldman, no. I mean, you go down the list. Bank of America is such a conservative bank. There's no way they're going to do that. So look what people are buying today. Newmont, because of gold. They're second. Don't buy Newmont. I mean, well, whatever. You can buy Newmont if you want to, but I'd rather just go buy the yellow stuff. Eli Lilly, that makes sense. No balance sheet risk. McDonald's makes sense. No balance sheet risk. Constellation Energy makes sense. Utility. American Tower makes sense. Real estate investment trust. Marathon Pete, numbers too low. Campbell Soup, numbers too low. Great quarter. Electronic Arts, please. But, that's a good list of what I'm saying you should buy. That's what's rallying right now. Yeah. And then if you really want to stick your head in the lion's den, just go buy J.P. Morgan. And I don't want to be in the lion's den. I never liked the lion's den.
But everybody is now scouring the assets of all of these regional banks or many banks, just looking for duration risk. Even though, frankly, you need to have deposit outflow to actually bring that into play in terms of crystallizing losses, which is still unlikely to happen. But nonetheless, you're going to see a lot of weakness in any of the companies, any of the banks that have some relation to SVB in the sense of that duration risk was really at the heart of the problems that they're having.
There's $700 billion in treasuries, David, that are